broader market because, quite honestly, institutions aren't putting money into small caps. He also advises us all on these small cap trades. Please, please, please only trade them during normal market hours. If you don't see a valid entry before 2 p.m., just wipe it off your board, okay? It's not worth pursuing it then because the expectation is that the move is going to be pretty quick after the open of the market. And also, folks, never, never hold these things overnight. Now, as far as Roger's catalyst for today is concerned, well, at the top of the list is the Fed. We saw housing starts come out, and they were okay. They actually were pretty good compared to what the expectation was. But the biggie today is on the FOMC and the following press conference. Now, I don't think it's any mystery at this point in time that everybody, including the markets, 100% expects that there will at least be a quarter-point interest rate cut. But the real thing that we're focused on, and particularly that Roger is focused on, is what is Powell going to say during the press conference as it relates to the potential of future rate cuts, because the markets have already starting to price in a rate cut for October and for December, and even a third one out into March of next year. So that's what the market is pricing in. The question is, will Powell throw a wet blanket on that or not? And that could be market moving. The second thing was the mags, okay? NVIDIA pre-market was down about 1%. Netflix was up about 1%. So activity in the mag sector. Consumer staples, General Mills was down 2%. Infotech, Workday was up 5%. And he also noted China. Why China today? Because their tech sector is significantly up on increased AI investments. So those were the catalysts coming in today. And remember, folks, catalysts, what are they? That's information that is known or will be known during today's trading session, and therefore has the potential to move the markets. Now, as far as Roger's daily stock list, watch list is concerned, he had several longs and shorts. And I'm also going to put this in the room here for everyone to see. You can see there were several shorts and longs. And the interesting thing is this, once again, Roger's he's advising caution ahead of the FOMC because, you know, a move there could radically impact a decision that you make. For example, he said, let's say, you know, you decide to take one of these short trades, but then, you know, the bonds do a turnaround on some information coming from the FOMC. These are the kind of stocks that could move aggressively higher based on that. So be careful, careful, careful. Also, as he always says, folks, if you're going to be looking to short these stocks or go long any of these stocks, be absolutely sure that you're seeing a clear breakdown or breakout strategy before taking those trades. His plan essentially was to go ahead and just be very, very quiet, you know, in the market ahead of the FOMC statement. Now, in his closing comments, he expects that the market direction ahead of the FOMC pressure is going to be fairly muted and sideways moving. He did note in pre-market that the bonds and the mags were noticeably higher, and he's concerned about those momentum levels. He honestly believes, as a technical analyst, that there is going to be a pullback in that. He also noted that many stocks are below the 50-day moving average, and that's a warning signal for him. To quote Roger, he said the mags are running away with the circus and they are disconnected from the broader market. And his opinion, they're bound to retreat back to normalcy, which will be at about the 15-day moving average. And if that kind of a sell-off occurs, it generally speaking could lower all boats. Now, we're not talking, you know, about a significant redirection in the market, but a normal correction based on where everything is high. So he feels things are toppy and he's cautious as a result of that. So coming into today's session, once again, he's got a great agenda. He's going to be talking about the process that he uses for picking stocks in the trading pit. I know we're all keenly interested in that. Also, he's going to show us how he uses the Pro Trader dashboard to find, you know, his winning trades. He's also going to tell us about some mental lessons that we can all do that will help us improve our game. Essentially, how do we go ahead and tamp down, you know, the emotions that can get in our way when we're looking to make objective decisions. He's going to be looking at when he looks for runners and breakouts. So when does he look for that? What's the kind of things that he needs to see for those? He's also going to tell us about the two biggest mistakes that people tend to make when they're mimicking his setups. He gets a lot of emails on a daily basis asking about him setups, and he's been able to identify two things that most people sort of tend to forget about as they look to mimic these setups. And time permitting, folks, there will be a special bonus here where he's going to show us the top stocks for today, along with their options and their strike price. Now, if you've got any questions during Roger's presentation, please type them in the chat window, and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. Also, folks, as you know, the chat is open to everyone. So remember the ground rules. Be kind, keep to the topic, no political discussions whatsoever. Please, please, please keep your side conversations to a minimum and focus on the education and information that Roger's sharing, because after all, he's here to give us an edge and to help us all become much more confident and consistent in our trading activities. So once again here, folks, we're a couple of minutes past the top of the hour. I know that Roger is going to be joining us momentarily. We've got a great group of people here. I'm just going to say a universal hello to everybody, but I know when Roger comes in, he likes to identify you specifically. It's just great to have you here in midday. And for those of you that were with us this morning, okay, you already know how Roger feels about the market and its potential and what his thoughts are ahead of the big FOMC information that's going to be coming out at 2 o'clock. And then the press conference, that's the key, the press conference at 2:30. So guys, I'm going to stop the share here. I'm going to say hi to Matt. I'm going to say hi to Roger. Great to see you guys. You're looking feisty.
Very feisty, very feisty. I think Matt's been battling the spy now for two and a half hours, right, Matt? He just keeps battling the spy.
My money's on Matt. My money's always on Matt.
Yeah, my money's always on Matt, and I'm just waiting here. I'm just kind of collecting data and looking for information and just trying to get everything ready for the announcement. What I usually like to do is collect the strongest stocks and collect the weakest stocks, and kind of keep an eye on them as we get into the announcement. And also sometimes, and I'll tell you what I like to do sometimes, and I don't know if I'll do it today, but what I like to, because I think I'll still be here. No, I won't be live here with you anymore. I may be able to have time to do it, is after the announcement, what I sometimes like to do is I like to do straddles and strangles on financial stocks in between the announcement and the time that he starts speaking.
Oh, so that's 1.5 hour period. Okay.
Right. And sometimes I'll do the spread right after he stops speaking. So it just depends. So what I'm looking for is I'm looking for a volatility crush right after the news to take advantage of options that were very expensive are now very cheap, but the movement in the stock is still there. Hopefully everybody understands what I'm saying. And again, I would only do that on financial stocks because financial stocks are in play right now. You don't want to do this on a biotech. Let me say hello to everybody, and we'll start. I always want to say hello to everybody. We got Sharita, Sean, Arnolfo, Louis. The announcement is at 2:30 sharp. Louis, Chris, Paul, Peter. Hey, Peter. Jill, Peanut, Arnolfo, Sean, William, Chris, Scotty, James, Jeremiah, Jesse, Cyrus, iPhone Ron. How are you? Tim, Andrew, Dr. Mike, Ellen, Mary, Catherine, Lewitt, Nestor, Sandra, Paul, Don. Greetings, everybody. Mr. iPhone. The link to the VIP room is in the YouTube channel. Raleigh will answer all those questions. Gus, Dave, Wesley, Mr. Dragon, Don, how are you? Good to see everybody. Good to see everybody. You got a lot of people here on YouTube. We got Kevin Richard, RP from Costa Blanca, Spain. It must be evening there already. Seth and Edward and Deanna. How are you? How's everybody doing? Hope everybody's doing great. Bugs, good to see you here. Joel, Stan, good to see everybody. Stefan, good to see everybody. Thank you for being here and joining us. So the first thing I want to do is I've noticed that a lot of folks still don't get this, and I'm going to try to explain this to you guys. Let me just share my screen so we can all be looking at charts while we do this. Let me just kind of look at everything. So first off, let me give you my prognosis on the market, and then we'll start with all the analysis and all that. So first things first, the spot, as I told you yesterday, and I was pretty adamant about this, we were getting a little too far ahead of ourselves. And the fact that we're down now is not a major surprise. Okay. If you look at the mega caps, you will see that remember yesterday, I spent a bunch of time talking about this, how they're completely outside of the range. They're now inside the range. Okay. And if I know anything, they're going to be coming down here and possibly down here. This is a clear situation, in my opinion, where it's just too much too fast. Too much too fast. Look, bond market from here all the way to here. Look at that. From being underextended or extended to the downside to being extended to the upside. And then even more so. So I believe that this caused this, and I believe now the piper has to pay the price. Notice not long, a lot of tech stocks, not really starting to look at defensive stocks. Okay. Now I want to make a little note, and you're obviously going to write down what I'm about to say right now because it's going to be very important, even though you may not realize it. Biotechs don't follow the general market. They're kind of on their own. They kind of do their own thing. So it's not, I mean, I'm not suggesting you trade biotechs. That's not my point, but there are certain sectors that are not 100% immune, but largely immune from Fed announcements. Chips are not it. Financials are not it, but biotechs beat to the kind of beat of their own drummer. You know what I'm saying? They're in their own world. Exactly, G. They're kind of on their own. Exactly. But as I was saying, what I'm saying is happening. And there were many things, and I don't want to be repetitive because, Raleigh, we spent plenty of time on it yesterday, right? Like I showed you this, I showed you how this was lining up with that and how we're completely outside. And if you guys want to see how I timed this and why I timed it and why I've been spending the last 2 days talking about this, coming back into range and finally, and then eventually coming here and here, watch the video from yesterday. I spent a bunch of time talking about it, okay? This morning we took a nice little halo. We took a little scalp in halo. I don't know if you guys got a chance to get in, but if you didn't, you got a bite of the apple right here to take profits again. We got some more profits if you want to hold on as a swing for this stock. Now, there's something I want to bring up, and this is something that's really, really important, okay? What a lot of you folks do, and I've noticed this, there's two habits. There's two habits. Jerry, send me an email. If you have a question about Trading Zone Live, send me an email. There's not everybody here is for Trading Zone Live. Not everybody here day trades the SPY. Not everybody cares about this. Send me an email. Roger@rogerscott.com. Or better yet, send Matt an email. But I will tell you this. We're not going to be in that trade. We're not going to be in that trade during, I promise you, we will not be in that trade during the announce. that I could guarantee you. Yeah. We don't like, if you want to gamble, go to Vegas. They'll comp you for losing. You know, that's crazy. That ain't gonna happen. Not at 2:00 or 2:30. Okay, all right. So you don't have to worry about that. That's actually kind of funny. No, we would never do that. So let's no problem, Jerry. So let's continue. So there's two things I want you guys to stop doing, and they're not easy to stop doing. They're very hard to stop doing, but at least I want you guys to start being aware that you're doing this, okay? If you're not aware that you're doing this, then you're really screwed, okay? But at least I want you to be aware. There's two habits. The first habit is I want you guys to keep in the back of your mind, okay, and maybe even put a card out. You are trading a strategy. You're trading an edge. You're not trading the next setup. The next setup does not dictate your life, whether you're going to be a winner or a loser, whether I'm a good trader or not, whether you're a good trader or not. The next trade is just a series of random events that leads to a non-random outcome. If you are not thinking in terms of randomness and probabilities, if you're thinking in terms of this is a winner, this is a loser, this is a winner, this is a loser, you will never, ever, 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 ever become a professional trader. And you will never, ever be able to grow your account because you'll never see the forest from the trees. You know, I lost money on these 3 trades. That means the next 3 trades are going to be awful. It doesn't work that way. It doesn't work that way. You work that way. The markets don't work that way. Okay? And I'm not even talking about my stuff. My stuff has very high win rate, but nonetheless, it doesn't work this way. You have to start thinking. You need to start living in the land of randomness, uncertainty. Highly random events should become completely normal to you. Okay? You can't, if you want to go from here to here in this business, you have to completely give up the whole, I made money on this trade, I made money on that trade, therefore it's this. I lost money on this, therefore. You have to stop giving meaning to each individual trades. If you want to give meaning to trades, that's fine after you do 100 at a time. Then you can give meanings to things. Then you can make some determination. But till you get to at least 100, you are living in the world of randomness. And what most of you will do is one of the following. You will start looking for other strategies that are better. You're going to start looking for a different style of trading because this one doesn't work, obviously, because you had 3 losers. You're going to start trying to you're going to do what humans do, what people do. You're going to try to improve. But unfortunately, you can't use logic and brain power and your inner strength to improve something that's inherently random. Do you guys understand? A lot of you, the market doesn't pay any attention to you. The market couldn't care less about you. You mean nothing to the market. Okay? How you feel, what you think means absolutely nothing. Don't include yourself in the equation. The more you can think in terms of flexibility and randomness, the easier it will be for you to stay in. So there's a reason why I want you to think this way. If you can't think this way, you will never be in the present. You will always be in your last trade, or you'll always be in your future trade. And you will never, ever be here. Because here's what's going to happen. You're either going to be thinking about, you're going to be scared to take your next trade because your last 3 trades were losers, which means you're thinking you're going back in time. The market isn't going back in time. Or you're moving forward and you're extrapolating what happened to you into what's going to happen into the future. Okay? Now, I know. I make it sound so easy, don't I? I make it sound so easy. I make it sound like anybody could do it. Well, let me tell you something. It's really hard. It's really, really hard to do that. It's so hard that some people don't even realize when they're doing it subconsciously. Now, I'm spending a lot of time on this. Do you know why? Because this is like, let's just put a score to it. If I was to give you the best trading lesson in the world, it would score a 1, and this would score a 99 on a scale of 1 to 100. Because you could be the best trader in the world, and you could be losing money left and right if you haven't developed the skill. But if you've developed the skill, you could be an okay trader, and you'll still make bank. So this is what separates the I can't make money in trading to I'm thriving all the time. You have to stop thinking in, for example, this doesn't work. This on Saturday, Saturday. Kane had a class. There was a guy in there. He made a comment about a strat. Now, this is why I got so pissed off. He bought one of Kane's systems 2 to 3 weeks ago. And I know that because he said, I just bought this a couple of weeks back. So I knew right away there's no way in hell that the laws of probabilities could catch up to him. It's impossible. So he's basically living in Disneyland. And he's like, you know what? I'm going to refund that and I'm going to get this because that system is just worthless. And I asked him, I said, well, let me ask you a question. How many trades did you take to determine that it's worthless? Oh, 3 trades, 4 trades. Okay. Gotcha. Good luck. Good luck to you. No, stop. Stop. If you don't like what I'm saying, if you don't agree with me, stop. Stop. Okay? Just stop. Stop trading with real money. Reassess things. Maybe there's a slight chance that I'm right. Maybe. I've only been doing this for 31 years. Okay? My point is this. You have to be right here, regardless of what happened yesterday and regardless of what will happen tomorrow. If you can't be in the now, and if you can't think in terms of probabilities, if you're going to be thinking in terms of your last 3 or 4 trades or your next 3 or 4 trades, you will never, ever have the objectivity to make current trades correctly, to stay with current trades, to manage current trades. You will always be living somewhere else. You will always be living, you will not be in the now. Okay? Okay? So I just wanted you guys to understand this because it's of paramount importance. It is so much more important than anything else we could possibly be talking about. I was telling another thing. I'll tell you guys a funny story. I was watching a professional trader, a friend of mine. He's a professional trader. I was watching him. I'm talking about Merritt, Matt.
Yeah.
So I was watching a video that he made, and this guy owns a prop firm. Okay. Yes, what I said is worth millions, Arnolfo. Believe it or not, it really is worth millions. People don't realize how valuable what I just said is, but that's the big deal, not what I'm talking about 95% of the time, what I just said. That's where the money is, okay? That's where the money is. Okay, and it's much easier to talk about than to do it. I'm going to also tell you that, okay? It's not easy. And if you think it's easy, you're not doing it right, or you're just a born natural, okay? Yeah, trade the strategy. Forget the individual trades. You're trading the strategy. You want to look back at 100 trades. That's reasonable. Reasonable. Not 3 or 4 or 5. 100. So let me get back to this, and I'll start today's. Well, I've already been doing today's lesson. And by the way, what I just told you, folks, is so valuable and so important. I can't even put a number on it. Okay, and I'm not even trying to sell you anything. Okay. So listen to this. So Raleigh, this is a great. You're gonna love this story, right? He's been trading for about 22 years. He owns a prop firm. Okay. So his only incentive to do all this stuff is to get people to come join him so he could see if they're good enough to join him in his group, okay? Mm-hmm. The only way he makes money is if he makes money. He doesn't sell anything. He is really good. He's really, really good. And a prop firm is a firm where you come in, you put in like $5,000 and they put up the rest, and they kind of finance you. It's like but he's only interested in financing people who are amazing. He's not interested in financing. He doesn't want to make people on the cost of getting into a prop firm. He wants to make money on you, basically on you guys being amazing traders. Anyways, that's not the point of the story. My point in explaining this was that this guy is really good. He's not just good, he's world-class good. He is amazing trader. He pretty much trades futures. He trades E-minis, he trades gold, crude. And he was showing folks how to scalp. Okay, and he made a video out of it. And so think about this for a minute, okay? World-class trader. This is a live video. It was lasting a week. He was doing every day, like 3 hours a day for a week. The first 7 trades were losers. People were
freaking out. Yep.
One guy's like, aren't you concerned about he's like, what? Well, losers. What are you talking about? He's just like, I don't even know what you're talking about. I'm just executing. And so as the week progressed, he started making a lot of money. His win rate was like 40%. He was wrong 60% of the time, but his losers were tiny. They were this small. I mean, he was like out. And my point was this: he constantly makes money. He's a consistently profitable trader. But think about, guys, think about if you opened the start of the program and I gave you 7 losers in a row, you would shit yourselves. You would shit yourselves. Anyways, so now let's get to the lesson. So today I want to talk about a couple of questions that constantly come up in the pit, and I want to answer them now because, well, we're going to talk about the pit. So let me bring this up. Okay, what is my process for picking stocks for the pit? Okay, I know you guys want me to get really complicated with you, but what I use is this right here, the Pro Trader dashboard. I scan the Pro Trader dashboard, and then I find stocks. I'm not going to get into it right now because I want to kind of give you some stocks. And then I also use, during the market hours, I use TC 2000. I use this platform right here. Let me just turn it on real quick. Don't worry, Kaylin, I'll make my own videos. Okay, here we go. Really like the stock right now. So after I go through the Pro Trader dashboard, and in the morning, I look at stocks that are making 5-minute relative strength highs. And at the end of the day, I look at hourly. But this alone is not enough. I always, during the day, look at, and Raleigh will collect the questions, and I'll answer all the questions before we conclude. Mm-hmm. And what I look for is I look for stocks that are moving up to 8-day, basically. If I find a stock that's doing this, for example, or a stock that's down here, I'm just going to pass it by. Because you see, the problem is this isn't scanning for daily. This is scanning for 5-minute relative strengths. Before market hours, I would use Stock Fetcher. So Stock Fetcher, I can come up with a list like this. And you guys have all these scans. So I can, 90-day high, 20-week high, 50-day high. I can come up with lists, and I can just visually scan them and put them on a list, and that's what I give you in the morning. But what happens for the VIP room or during market hours? I can't do that. I have to rely on this, and I have to rely on this. Okay? Here's one scanner. Here's a long scanner. Here's a short scanner. Here's a long scanner. And here's a short scanner. And I just basically, here I get stocks that have a little volume, and I get to see how they are. So what I do is, assuming the stock fits my criteria, I put it right here. So let's just, I don't want to go through the whole process because it's going to take a lot longer. So what I want to do is, I want to just go off my watch list today and just assume that all of these stocks are from the scanner and because they are. I literally got them half an hour ago from the scanner and from this. So this is the list, okay? So the Pro Trader dashboard and TC 2000 helps me pick that, okay? So the next question is, well, Roger, tell me, when should we be looking for stocks that look like this? Kind of like GE yesterday or maybe even today, or like GE before it broke out. This is a runner right here. That's not a runner. That's what do I like to call it? A grinder. Thank you. A grinder. Thank you so much, guys. When GE was here, it was a grinder. That's a breakout. Okay. So the question is, Roger, when do you like to look for breakouts? When do you look for grinders? Well, there's 2 rules, okay? We're not doing anything right now, iPhone. I'm just showing you some lessons. We're not going through stocks just yet. Don't confuse anybody. Okay, so the first thing I do is the stock overextended compared to, boom, it's overextended. So this is too much this breakout is too much. Now this is okay. This may be a good pullback opportunity, right? But we're a little too overextended here. So the first thing I do if I want to buy breakout versus a grinder, thank you for that. Again, I would have still been sitting here thinking about it, is I would have noticed that this is overextended. And Matt is literally this morning, he was trying to create this for me over here so that I don't have to keep pulling this up every time I want to show this to you. You'll be done with it hopefully soon, Matt?
Yep.
Okay. Yeah, I mean, it shouldn't take him very long. He already has the formula and everything. So if I see it reaching up here, that's overextended. So I want to see a breakout that's not overextended, and that's clearly overextended. Now, this is not overextended. So that's the first thing I'm going to look at when I'm deciding if I want to take a breakout or a grinder. Well, let's talk about breakout first. Breakout. I don't want it to be overextended. This is overextended. It needs to come back now to the 8-day. So now we'll wait for this to come back. But look here how it's hugging the 8-day. So you see here how it's a grinder. That's fine. Now, if this bar just would have happened to come up here, right here, that would have been a breakout that's not overextended. You see the difference? Mm-hmm. Now, I know I'm talking, and I've been doing this for many years, and for me, this is like really basic, and I recognize that for some of you, it's not, but you see this bar right here? See how it touched the 8-day EMA on a daily? And you see how here it's above everything? If it was just a little higher, this would have been a kosher breakout. Okay, good. But this is overextended. So that's the first thing I look. I look at the relationship of the stock to the 8-day moving average deviation and whether it's overextended in comparison to the 8-day. So that's the first thing that I look for breakouts. First thing.
Roger, just quickly on that point, a number of people are asking, that green line, that's not the VWAP, is it?
No. VWAPs, when we talk VWAPs, we talk intraday. This is VWAPs. When we talk VWAPs is 5-minute charts. That's this. 5 minutes, you see?
Yep.
This is daily. So
when we're talking line there is the ATR, the deviation there.
This is the 8-day moving average, exponential moving average. This is the 1.5 times ATR from the 8-day EMA. That's all this is. It's a modified Keltner channel. Modified, not
sorry to interrupt you there, but
it's okay. No, it's okay.
Because it's core to how you look at this to see if it's over.
It is very core. It is, because you can and look how good it gives you a rhythm. What I'm trying to do is I'm trying to show you guys how there's a rhythm to a market. Mm-hmm. And the rhythm is price likes to gravitate towards the 8-day EMA, as you can clearly see right here. Right? Look, it's like a magnet, right? And then once it runs away too high from it, it tends to come back. Again, you could see it right here. You could see it right here on mega caps. Look, we spent like 20 minutes talking about this yesterday, maybe more. See how, look, I said, oh my God, this is so overextended. Yes. Just rewind yesterday's tape. I said, oh my God, this is so overextended. I haven't seen this overextended in so long. Blah, 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 blah. This should start coming back. Buy the rumor, sell the fact, the bond market. We talked about all of this yesterday. I don't need to talk about it again. And if you missed it, you could watch the replay. All right. So right here, and I'm using the same tool. It's just one tool, and you can put this on any of your charts. Mm-hmm. This is just calculating the 10-day ATR, and it's multiplying it by 150% away from this 8-day EMA. That's all we're doing here. All right.
And by the way, guys, Google is your friend. If you don't know what ATR is, Google ATR.
I spent 15 minutes yesterday explaining what an 15 minutes yesterday in the beginning explaining what an ATR is, Bull 22, right. Because we were explaining profit targets for Kane's program and how I was able to guess them. So I had to explain what an ATR is. We spent a bunch of time doing that. Raleigh, would you mind dropping?
I got you covered, buddy. Turn your chat off.
All right. I'm just going to do my thing. Let me.
Yep.
I'm going to. I got bigger fish to fry.
Yep.
All right. So you see how we're too far away? We need to come back here. Now it can come back two ways. The 8-day can catch up, or this can fall down. But usually, if it goes up that fast, it usually comes right back down. That's what I was so adamant yesterday. I'm like, I wouldn't be buying tech stocks or financial right now. And again, if you missed this, I spent an hour talking about this yesterday. Like an hour talking about this yesterday, okay? So you guys will have plenty of information to go off, okay? See you later, Ken. Okay. So so those are the mistakes people make when they're up. And the second mistake people make, and this is the biggest mistake. I wanted to save the best for last, but the biggest mistake people make is, let me just pull this up here. Oh. Where is that chart? I'm a mess. I'm telling you. I just can't keep things. I can't keep things on my screen. Oh, here it is. I found it. Okay. Is the broad market. So, how do we know if we want to get grinders or if we want to trade, grinders or if we want to trade breakouts? Well, is the SPY overextended or not? If the SPY is not overextended, breakouts are not that bad. So is the SPY. Same rules, same rules. So let me give you a hypothetical, okay? Let's say we were right here, right here, right here. It's perfect, actually, right there. Do you think I would have problems with trading breakouts on individual stocks? Hell no. No. Why? Because the SPY is not overextended. Here I may. Here I may.
Yeah.
But here I'm not. Here I'm not. So the lower you are, if you're above the 8-day EMA on the spider, trading and by the way, you can also trade grinders. Grinders you can always trade grinders, okay? Like whether this is overextended or not, because grinders are. But here's the problem. Here's your problem going to be with grinders, and this is an interesting discussion. A lot of people might have not thought about this. How can you trade? Remember, we're trading relative strength, right? So if a stock is doing this, right? And if the index is doing this, then the index is outperforming that stock. So in principle, that stock is weaker than the market. And what's our first rule? We don't trade stocks that are weaker than the market unless we're going short. See the problem? It's like a self-solving problem. So grinders, usually you will not get grinders when the stock market is overextended, because then it's gonna be hard for you to know if that stock is stronger or weaker. And you don't want to trade breakouts on stocks when the SPY is up here. That's very, very dangerous. So right now, till we get back down here, we're limited in trading stocks that are just starting to move higher or grinders. We're not going to try massive breakouts. Okay, so I needed you guys to understand that. Very, 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 very important. All right, very, very important. And another thing, and I think most of you have actually started doing this, is always look to the left. Always look to the left and try to make sure there's not much noise there. Obviously, there's not much noise when the market's making all-time highs every day. But once we get back here, how much noise do we have here? 2-3 bars, or do you have like a circus here? So just always look to the left to see how much resistance you have. Okay? Always do that. Are you still long, Matt? Oh boy. Matt is Voldist. All right. Oh, big divergence. By the way, folks, the market is diverging right now. We've been going straight up pretty much on the Vold the whole day, and the SPY has been going down.
Yeah.
Typically, these divergences resolve in the favor of the Vold, not the SPY. I say 90% of the time. Some people say 99% of the time. But if that's the case, then we should start moving higher pretty soon. Also, ADD is very strong. ADD's up still over 1,000, which means the majority of stocks are above yesterday's high. What I think is happening, the market is waiting for the Fed news to come out, or before that, and it wants to shake some people out and then start heading back up. And also, we could be seeing this divergence right now because the majority of the move is coming from smaller stocks today. Richard says 99.9%. That's Richard right there. So again, just kind of wanted to explain that to you. All right, now let me give you stocks. Let me give you stocks that are on my watch list. Let me give you stocks that are on my watch list. And today I'm going to give you the options too. So you don't have to look for them, okay? We don't have to look at intraday, really. You can just kind of do that, do that. Now, as we look at these, my suggestion is to keep your eye on the ATR. Remember we talked about ATR yesterday extensively? I'm too kind. Okay. All right. The short list today is very, very short. Now, folks, what do you notice when you look at this trend? What do you notice? That's a breakdown, obviously. You trade that to the short side. What do you notice? On a scale of, let me ask you this. On a scale of 1 to 10, what would you say this looks like? So far, 9, 10, 7. I would say this is pretty close to a 10. Okay, how much back and forth? How much back and forth does it have? Almost none. Look at this. Look how it glides. It just glides. Doesn't have arrows over. It doesn't have stuff going on in between. If you got in here, how much adverse movement does it have against you when you go short? None. This is a very, very, very strong. This. Look how it broke down, but look how we're still close to the 8-day EMA. That's like really a good. This is a quality setup right there.
Mm-hmm.
The only problem with the spread and the options, and I haven't checked yet. Yeah, they're crap. You won't be able to get it off. But as far as quality of a stock, this is a beauty right there. Volume is increased, downside volume increasing, compresses for God knows how long. Look at this thing here. Beautiful, beautiful, beautiful. Still close to the 8-day EMA. That's about as nice of a short as you can get.
Mm-hmm.
No, I'm not joking. I'm not being sarcastic. I'm totally serious.
No, you're right. And Roger, quick question here. A lot of people don't understand what those white bars are. And I know that's just a way that you plot high volume on the bar.
Yeah, that's just when you see, this is the 50-day moving average on volume daily. And whenever it gets 20% above, it highlights this for me. So you see how volume
is on the TC2000, folks. This is not on Thinkorswim. Yeah,
this is TC2000. All it does is just highlight bars for me that have a higher than average volume, so I could see where a lot of institutional trading happens.
Right.
Yeah. Okay. And another one, BMI. Also not bad at all. Ironically, I was only able to find 2 shorts that I like, but both of them were actually pretty good-looking stocks.
Absolutely.
Look at how it respects that this is a grinder. It broke down. It's below this level. This is a beautiful short. That is a beautiful short right there. If you want to know what a good short looks like, that's what a good short looks like. That's what a good short looks like. See how price isn't going back and forth all over the place where you don't know. If you put this across the room, you can clearly see exactly what's happening, which by the way, is the test. Okay, is the test. Okay.
And so, Roger, looking at something like this, which has been slowly grinding lower, you just a moment ago, you put up a box. Let's call that a range box.
Compression.
So people are wondering, so where is the best breakout signal? Well, it's when it drops below
well,
the
look,
box.
look,
yeah.
look. Look with your own eyes. Look. This is the compression, right?
Yep.
We're breaking down.
There we go.
But we're not we're breaking down, but look at where we are here in relationship to the 8-day EMA. You guys see that?
Yep.
We're not overextended. For this to be overextended, we would have to be $5 below this because ATR is $5. So this is at 170. We would have to be at 173. We would have to be over right here for this. No, right. Excuse me. Sorry. Right here. If price was right here, right there, then I would say it's too overextended. But we're like still here. Yeah. I haven't got to the option yet. Remember, I'm not. Some people like to trade the stock, whatnot. But yeah, this is very. I said there was only 2 stocks to the short list, but ironically, I really like both of them. Anyways, my level to the left. How far does it go down? Oh, profit target here. Profit target here would be. You've got a little room. You've got some room here. You got some room, Mr. Dragon. Are you still long, Matt?
Yep.
Oh my goodness. are you going for the jugular today?
No, just
You want to tell people who are maybe in the what your thinking is since you're here. We're talking about Matt's trade in in Trading Zone Live.
yeah.
What's your thought process? Go ahead and tell them. Take like a second to give them your thought process.
Well, we've had a lot of reversions all day long. The volt still isn't going down, and it's lunchtime. We get these moves a lot, and we immediately revert them. Now, will we trend change? I don't know. Do I still like the long trade? Probably not unless we really go higher. But am I going to jump out at the bottom? No, not over lunch. I'm going to wait till we get some buyers and then stop out at a better price, which we're already 17 cents higher.
By the way, where's ADD? I lost my ADD.
It's at 1,000.
See, that's the thing. ADD is at 1,000. Is telling us most stocks are above yesterday's level. So it's definitely a tricky one.
RSP
Definitely.
is also not breaking down.
Say what?
RSP is not breaking down.
Yeah, yeah. All right. So anyway, and yeah, there's a lot of shenanigans before the announcement at 2:00. Bob says your mic is very low, Matt. He is talking kind of low.
My mic was pushed down. That should be a lot better now.
Oh, yeah.
All right. You want to repeat what you just said real quick because a lot of people couldn't hear you.
Yeah, I'll repeat it. One is it's lunchtime, and usually these moves are just noise, and we'll wait for them to at least be reverted back towards the price range we've been in. There's really not a lot of volume behind this move either, so that doesn't make me feel scared about it. Two, the internals are still pretty strong. Volt's not going down. ADD is still at 1,000, and RSP is still up. It's not even close to breaking down. It's actually, let's see here, $1.20 up on the day still. So, not scaring me out just yet.
All right. Well, I figured it was a good opportunity for you, and you may want to update them on the channel in case they're not here. Okay. So let me continue with the long side, okay? BAC. Look at this, guys. Not too far away from the 8-day EMA. Financial stock. You definitely don't want to touch this before the announcement, but this is a very nice look right now. Okay. And financials don't necessarily go down when interest rates go up, just FYI. Rocket. This is more of a pullback. Made a high. Now, I wouldn't day trade this. Very, very, a lot of very wicky here, but could come right back up right here. Just looking at this one, it's on my watch list. CG. Now, this is I would say this is was a breakout this morning, and now it's back to being a grinder. Okay. CG. AbbVie. Now, this probably is my favorite stock today. I really like this stock right now. Maybe not my favorite, but it looks really good right now. I like this stock. Caterpillar, a little overextended. A little, see this? The distance from here to here? A little too much space. Too much space. And again, you could see, folks, look, every time, look, Raleigh, every time, when it comes up here, what happens? It comes right back down. What happens here? It comes back down. What happens here? It just happens all the time. It's not like once in a blue moon kind of okay, let's put it this way. It doesn't happen one in 10 times. 1 in 15 times, but it happens every other time, okay? Okay. Because remember, this is already a breakout. It's not for it to go higher from here. It would have to be a gap and go. Gap and goes are not that. They gap, but they don't go. They don't go anywhere.
Yeah, they burn out. Yep.
They burn out. Yeah. Levi's. That's very nice stock. I'm trying to find stocks that are not overextended right now. Overextended. And TEL. That right there, my friends, is a beautiful chart. That is a 100% grinder right there. Now look at the slope. Notice something. I'm pretty good at, my eyes are still pretty good. Would you say that, Raleigh, would you say that's about perfect? The slope?
Yeah, Absolutely.
Would you guys say that's about perfect? So I would say let's just pretend we're all architects here. What would you say the slope is about 22%, maybe 23%? No, I'm not kidding.
Yeah,
The reason in Los Angeles, I used to build a lot of custom hillside homes in Los Angeles, Raleigh, and in LA you have the 20 rule is the streets have to be 20 foot wide. The distance from the fire hydrant to the house has to be 20 feet, and the slope can't be greater than 20%. So this 20% slope, I almost have nightmares about it. You know what I'm saying? So that's why I could. My point is, it's got to be over 20%. 25% is fine, Richard. 25% is fine. Anything over 20%, and you have a grinder. The same pattern, but the slope being like this, and you have nothing. The same pattern moving like this, or like this, and you have a nice clean trend. Okay.
Mm-hmm.
And again, my point is that I'm just trying to. It has to be greater than 20%.
Okay.
So, so anyway, right here, if you see a trend like this and it's slightly moving higher, that's a clean trend. Actually, RSP, this is very dirty compared to what I just showed you. This is the broad market. And you could see the slope, though. The slope is increasing, but here it stops.
Mm-hmm.
That's my beef. And this is what I was talking about yesterday, how QQQE. See, today, finally, for the first time, QQQE is making a move. This is the first time it's breaking out. And what this is telling us is that the smaller 100 stocks in the QQQ are actually starting to move.
Yeah.
That's a very, very sign. And I don't remember the guy's name, but he kind of looked a little like me. And I told you that what I predict happening is money coming out of the mags and coming into these smaller stocks. And that would be a really good sign that the market is still relatively strong.
Right.
Assuming this stays here. And I remember somebody telling you that yesterday. Now, folks, I know for a lot of you, what we're talking about right now is, it may be a little intimidating. It may be a little much. It may be, you might have thought it was going to be easier than this, and it does get easier. But one of the things that you could do to make your life easier is you could join a program that's specifically designed to help you get there. Okay. So we're going to do a little class right now. This is the last day I'm doing this class, probably in this quarter. I promised you I was going to do it twice. Today's the last day, and this expires at midnight. Matt, would you mind excluding the people or sending the people a link on YouTube so that they can come here? Okay. Now, folks, a lot of what I just talked about right now is going to be encapsulated in this class that I'm going to do for about half an hour. If you feel that you like my analysis, if you feel that I'm actually, who I purport to be, that I'm not just some dude pretending to be a guru. There's a lot of them flying out around in this world. This should be very, very, very beneficial to you. And this should really help you gain an edge on the market, like really, really gain an edge on the market, okay? So please pay attention, take some notes. It'll only take about half an hour, and this is the last day I'm giving this. So if you want to catch this, this is a real good time. One of the things that I look at when I want to learn something from somebody, I don't start in the beginning.